Hi, thanks for joining me today. Our topic is going to be purchasing an investment property, right? We've already talked about buying yourself a house. Now we're going to talk about somebody else buying you a house, right? Your rent is going to cover your mortgage and you get a free house out of the deal, essentially. And in a perfect world, that's the ideal goal. That being said, there's some things that need to be, obviously looked at, and some math needs to be done, and preparations need to be made, because it's not the same as just buying any old house. Okay, so first off, the down payments are larger. Okay, conventional loans, generally speaking, 5%. You get into a conventional loan. FHA is 3.5%. That's to buy yourself a house, right? To buy an investment property, there's a lot more risk involved with the bank. The bank likes to see a little more skin in the game, right? So they require that you put in at least 15% on a single family and 25% on a multifamily, so that's between 2 and 4 units. Okay, all residential lending ends at 4 units. You can't buy more than a 4-unit property with a traditional residential loan. That goes into commercial. Okay, commercial is a different animal. So you have to put down 25% in the event of a multifamily, and let's just focus on that for right now. So you also have a reserve requirement. Reserves are extra money. It's leftover money. It's 401k, it's savings, it's whatever. It doesn't get touched. It doesn't get spent in the transaction. The only money that gets spent is the down payment, the 25% plus whatever closing costs, whatever you work out on the house. Right? Whatever it costs you to buy that property, that money goes away right after the transaction, right? It's spent. The reserves stay put. They don't get touched, but they do have to be fully verified. So it can be a CD, it can be an IRA, it can be a 401k. With a 401k, you have to be able to withdraw money though, right? So you can't just say I have a 401k, but a lot of companies that set them up in different kind of plans don't allow for you to simply take money out whenever you need to, right? It has to be a hardship. So there's some parameters around that. And I'm just going to leave it at this. When you're using a 401k, we ask for what's called the terms of withdrawal, right? And that's going to delineate the rules of how that money is. And generally speaking, you can get enough money out that they're going to count it. Okay. That being said, it's not always a guarantee, but everything else that you have where you can withdraw money at will, you're fine. Okay. But the reserve requirement is going to be 6 months, generally, all the way up to 12 months. And it really depends. And when I say 6 months, 12 months, what I mean is 6 months worth of payments for that property and every other mortgage you have. So if you have a primary residence and that payment's $1,000, you need $6,000, and the new payment's $1,000, you need $6,000. You need 12 grand in reserves. If there's additional properties, each one of those you need 6 months and 6 months and so on. Okay, so as your portfolio grows, so does the requirement for the reserve, right? That pot's got to get 6 months worth of payments of everything bigger, or the new one rather, larger by that amount. So that's something obviously that needs to be dealt with up front. Okay, you cannot get gift funds from a family member like when you're buying your regular house and call it reserves. You can't use gift funds at all in an investment purchase, right? An investment is predicated on the fact that you don't need anybody else's money. You got this. This is all you. I have so much money that I can buy an extra house just so I can rent it out and be a landlord. And great, and that's the goal, and that's absolutely an attainable goal. I know people from people who make $50,000 a year to people who make upwards of almost $1 million a year that just buy houses on a regular basis because it's a nice supplemental steady income that they can count on, okay, for whatever reason they like it. That being said, you do have some other options in the mortgage realm with investors. Maybe some of you already have a house. A lot of times people call me up and they say, hey, Emil, I want to buy another house. I'm going to refi this house to get money for this house. Okay, so they refi one of their other investment properties. They bought it, it's been growing in value, or they've done significant improvements. They want to get some of that money out that they put in. They put 50, 80 grand in the house to spruce it up, and now it's worth, $80,000 more, or whatever the case may be. They want to take a look at this and see if they can pull $50,000 out to throw towards another house and put that as a down payment. Now they got 2 houses, and 2 mortgages, but they got 2 whole houses out of it too. So, excuse me. So for cash out, On one unit, it's 75%. Okay, you can get 75% of the home's value, so $75,000 per $100,000 of home value. For a multi-unit, it's 70. Okay, so you can take 70% out, and for the purposes of this video, I don't know how many of you out there would be interested in anything like that, but a lot of people actually do refi investment properties. So that being said, we're good. Now, the other option. I mentioned earlier that conventional was one of two options, okay? And a lot of people, this is where it gets interesting because a lot of people don't realize that they do have other options outside of conventional, or hard money, or something with an exorbitant rate and weird terms, balloon type things. And that's just some non-traditional products. My company, for instance, has what's called a DSCR, it's debt service coverage loan. It's an investor cash flow loan. Basically, you have a ratio that the mortgage has to cover, the rent has to cover the mortgage. Okay, our ratio is 1-to-1, which means that it's a dollar for dollar coverage. If the mortgage is $1,000, the house has to make at least $1,000 in a rent, which of course it's gonna, because who's gonna buy a rental property that's just breaking even, right? So you can always assume that the rent's gonna be higher than the mortgage payment, right? Simple math. So in that case, it's a true no-doc loan. There's literally zero income requirements. It's actually the easier of the two products. Okay, it's a very attractive product, and generally speaking, the only other qualification you need besides score, and I'll get back to that, is having had 12 months prior experience as a landlord. So if you've added 12 months experience with another rental, even years ago, doesn't have to be the last year, just that you know how to manage a property, and that you have a sufficient score. The score goes anywhere from technically 620 for some of these products, but generally speaking, you want to be over a 680. And the rate's going to be, generally speaking, a point higher, something in that neighborhood. I don't want to really talk rates on this, but it's a higher rate. Expect a higher interest rate. There is no PMI on these products, but they're nice if you don't have the income to show. Right? Some people want to buy a rental house for whatever the reasons that we've discussed already are. Pick one, but they are a contractor, and they, whatever the way they do their taxes, they don't show enough to be able to purchase a home through traditional terms. So products like that do exist, and they work, and that's pretty much the extent of it. I mean, there's foreign income loans. So for foreign nationals, they use the same structure as the debt service loan. It's a debt service coverage loan, but there's some special rules for people, say in Canada, or I get clients in India, China, you name it. I mean, you can do loans outside the United States, but again, for this video, you guys don't care about that. So that being said, there's a lot of interesting things you could do with a rental rental property, and it's not as complicated as it sounds. Okay. There's things you got to look out for. Make sure you have your score where it needs to be. Make sure your reserves are where they need to be, and you can start looking at purchasing a rental home anytime. So you guys, until next time, have a great rest of your week, and thank you for watching. And I'll talk to you later.